All right, guys, let's get rolling. And one more button to push. And here we go. All right. Welcome to Master Trader Live. Okay. Today, we're going to talk about finding opportunities in crashing indices and ETFs. So there's been a few little mini crashes going around here and there, depending on maybe the sector is, of course, the stock that you're in. But as far as the market crashes, there's a lot of threats of it, a lot of talk about big corrections coming, when it's coming, who knows when it's coming. From our perspective, it's not coming now or today or next week. We're in a bull market, and we're going to talk about some of the underpinnings of that and why it's been going up, and some opportunities that we are looking at today. So I'm joined by Dan, my partner, and our resident option guru expert. Anything you want to know about options, just direct it to Dan. And anything you want to know about technicals, I'm your guy. And together, we do an awesome job together, Dan. How you doing?
Excellent, thanks. Welcome everybody. And yeah, there's a few buzzwords you said there just in that little introduction. And well, let's dissect it. So first, finding opportunity. That's what we're going to talk about today. How do we find opportunity objectively without doing it in a disciplined manner? And opportunity happens in different instruments, stocks, options, ETFs, currencies, commodities, and we're going to explore those. And you also mentioned the time frame. Yeah, the media seems hooked, on the idea, as you said. Well, let's just go to this next slide. Trade wars, and they're putting fear in everybody's minds, and there's different reasons for that. The trade wars, Turkey was the most recent one. The things with China is still going on, but the U.S. markets have held up incredibly well, and we're obviously going to look at that together today, as well as looking for opportunity around the world, because a lot of these foreign country ETFs and their currencies and commodities worldwide have been in little crashes, and it depends how you define that. But they are crashing percent-wise, and as we're going to see, visually on the charts.
Yeah, and it really is amazing how the market intraday sells off, or on a particular day sells off, as if the world is coming to an end, and then stops and reverses almost instantaneously and comes back. Where the U.S. market just seems resilient to anything. So, I mean, that is a bit unusual as to that happening and these other markets selling off like that, and just the discrepancy between all of that historically is unusual. But it's one of the reasons that we love the markets, is that while things are the same in a lot of ways, there are things that are always changing that kind of keeps us on our toes to be on top of what's happening, and patterns that we look at, while they follow through the majority of time, sometimes they don't, and why we take advantage of failure type patterns.
Hey, Greg, I'm sure we'll get into that when we're looking at the charts, but maybe can you give a sneak preview of what you mean by, the things that we're looking at that are different now to help put the puzzle together?
Well, I mean, without looking at the charts, and we have a couple of slides that we want to get through, but just an example of that we talked about in the chat room yesterday, I mentioned, as we were going through different markets, was 2 weeks ago, the sell-off in the transports, where there was this gigantic, big red down bar, and it's like, that is not a good sign. And what did it do? It just negated the whole thing in one day.
Absolutely.
Right now, another example, but it didn't play out exactly in such a dramatic way, was last week, the oil ETFs broke down out of a topping pattern with a big wide range bar to the downside. And it retraced the whole thing in a matter of 4 days. This historically doesn't happen that fast, but information moves so much faster than it did in the past. But these type of reversals are just in alignment of what I've coined as the Mr. Schizo marketplace. It's like it's a bull market, but hey, right now I'm scared to death and the market is cratering. But you know what? I'm coming back from lunch and I'm feeling pretty good. So let's buy. Right back up to the races.
Right. And as we tell our subscribers, when we're in this chaoticness, well, two things jump to mind. Number one, go to a bigger time frame to get a more realistic picture, and we're going to do that together. And number two is we're giving things some more room and position size accordingly, where we don't get stopped out during the whips on a smaller time frame.
Absolutely. Just adjusting to a particular market environment with larger position size, you kind of stay out of that noise, is what I would call it. Whereas the way the markets were moving up prior to the run that started at the end of the prior year and into this year, from the presidential election, November of 2017, as the market started to move up, if you look at the daily and weekly charts, things moved up in a very certain way. And we define that as the day-to-day ranges as being relatively in the same size. The pullbacks are shallow. Prices go sideways versus pulling back deeply. Whereas, after the beginning of this year, big move down, big move up. But one of the things that I talked about in our room just before, we broke, was that volatility from the beginning of the year and range expansion is contracting considerably to the point where something's going to happen pretty soon.
All right, excellent. Yeah, we both love talking about the markets and charts. So let's just get through some of these introductory background slides of how we're going to tackle today's presentation, and then we'll jump right into all those exciting charts. So yeah, you can see the first bullet. That's what we're hearing: trade wars, currency crises, Mueller investigation, inverted yield curve, recession on the horizon. So what are you supposed to do if you're a trader or investor? How do you filter through that noise? Well, what moves stocks? Let's just go back to basics. The media news doesn't move stocks. News causes people to make decisions. And that is the only thing on planet Earth that's going to move stocks. The imbalance of supply and demand. End of story. And people invest and trade for they have different reasons for entering and exit trades, and the marketplace puts all of those collective beliefs together. And with our charting software, we're able to get a picture of that. So that is what is real. We see the tip. Charts don't lie. These are real. This is showing you the demand and supply on any instrument on any time frame. So that's all we're doing, is trading the imbalances of supply and demand, whether we're bullish, bearish, or neutral. And we're going to now show you how to go about finding opportunity in these things that we've talked about: the ETFs, currencies, and commodities.
Yeah.
So here's our master trader approach to how we're going to answer that question, and finding opportunity objectively and not listening to the noise. We use news to bring us to the chart, and then we let the chart dictate whether that's a tradable event. News could actually ignite a move in that direction, in which case the charts are going to confirm it. Or that news could set up opportunity of a contrarian play because the bullishness or bearishness got too extreme and we're ready to jump on board a contrarian stock or option trade.
Yeah. And part of the issue in the moment, Dan, it's been a little quieter with our trades that we, sometimes we find more than we could possibly ever put out there. But,
right.
When you start looking at what's happening in the market today, where the day-to-day ranges and the differences between those swing highs and lows are getting tighter, it becomes more difficult because you don't have these big movements. And when some have, like the Tesla trade that you got everybody into a couple of days ago, which was perfect, where it fell so hard and fast into support
On Monday. Yeah.
So that reversal was, a great example, but there aren't a lot of those lately. Now earnings season is over, so but that's the ebb and flow of the markets, where things move and then they don't. And we say sitting on our hands is part of a position. It's not a comfortable one, but
and then at times like that where things aren't moving, then we love selling our credit spreads. And when we talk about various setups here, we're going to be talking about that as we look at real charts and making a watch list for opportunity. We trade directionally, both stock and option. And then we trade options on what we call an income trade, which is just selling credit spreads around either a topping or bottoming pattern and collecting money just for predicting that short-term stabilization.
Yeah, we've had some pretty nice swings too lately.
Oh, absolutely. Yeah. We had, people in the green room hear me say it all the time. That's the first thing we do after the pre-market analysis each morning is we look at I refer to it as our inventory. That's all we're doing as traders and investors. We're exchanging inventory of stocks, options, and ETFs with the intent to exchange out of it at a profit. So that's our method. So you start with the proper education, which you get through our seminars. Then all we're doing is going to the marketplace and looking for these high probability setups. We enter them and manage in between. That's all it is. We're unemotionally applying this approach to anything with a compelling pattern. Well, why don't you, I love when you talk about objective versus subjective. Why don't you give your taste on that?
Do we have time for all of that, Dan?
Well, I'll summarize it then. It's just objective means existing in fact. Greg says it is what it is. You don't subjectively impose your wishes on something that's not happening. Then you're just denying reality. And then once
but part of the struggle for everyone, and I started to write a little article on this, was that this industry about technical analysis, and they haven't done it intentionally, but you're actually been set up to fail by the whole system. You've been set up to fail because for many, many years, going back who knows how long, everything is based on an indicator-based methodology. And look, if indicators worked, as common sense tells us, they'd stop creating them. But it's a profit stream for educators that want to sell indicators, as well as trading platforms that say, hey, we're going to sell you the latest, greatest indicators in our platform. So you start adding all these indicators and you're lost.
Your picture froze on my side.
Well, mine's moving, Dan. I think.
Now you're back.
The connection there. Yeah, so, I've been telling people for years, take the indicators and spaghetti screen off your charts and learn to use price movement, and clarity will come amazingly to, yourself. And, the red light, green lights, all of the lines and so on. And it's just enough of that. Let's get on to other things. We'll look at the charts and you'll be able to see how simple it really can be.
All right. So, we kind of talked about this already, that so the charts don't lie. They're communicating the language of each bar, and then the patterns is a collective of candlesticks. That's telling us, what is real. So sure, we can jump right into it.
Yeah.
And then, you can go to mastertrader.com/spread trader to read more about these high probability credit spreads that I'm sure we're going to keep mentioning as we start our scanning right now.
Right. And guys, that last package, I mean, if you're interested in credit spreads, if not, we could find a link. You could take a trial to the chat room, but the chat room, we provide a lot of great ideas every day. But the education is the best, bar none. I mean, someone put it in there. One of our favorites in the room, Pat, said the other day, where can you go for the cost of this room on a monthly basis and be mentored every day? So it's a phenomenal room with Dan and I do a tremendous amount of education every single day. But let's look at some charts here and see what's going on around the world. And let me a sec here to bring that up. Decide which platform I'm going to use.
That's quite a fancy blue shirt you have on today.
I'm glad you enjoy it. All right, so we can go through the broader markets, but we will go and look at some of the other countries around the world and currencies to see some of the crashes that are happening. And maybe we want to start with that first, Dan. What do you think? And then we can come back to our markets to see how the huge difference there is about what's going on.
Sure.
Let's do this. And let's just not even look at the moving averages at this point. So one of the favorites to look at is the euro and what's happened there, because you say, looking at that chart and say, well, where's the crash? Well, this was a big move, and this is a weekly chart, and this started to move down before, but looking at last week when more of that news began about sanctions and currencies falling apart, it was going sideways, bottoming here, and then it just fell sharply. But look at where it is today. And this is, this market is a little crazy in that giant drops like this and being rallied back up like that, is what we saw in some of those oil ETFs as well. Right? Dan, as I'm looking at this and saying, well, look at this drop and this recovery, it's pretty incredible. But now that it's up at resistance, what could possibly happen is if it weakens here, and those of you that are currency traders, you want to keep an eye on this, is this a breakdown failure? Is it a shakeout? Or is this just a rally back up into resistance where it's going to reverse? And then you go into smaller time frames, you start looking for signs of the reversal, and it's not there on the daily. It's not there on the hourly. It's still up. So using multiple time frames as we do, even if your bias is to sell this short, wait for a trend break on a smaller time frame. That's not happening yet. And going back to the weekly, this break here and this head and shoulders top suggests a move down to here. So something to keep an eye on as a currency trader to see if this rolls back down again. Many that would have participated in this, hopefully they covered their shorts.
And just to add to that, because yeah, I think a big part of going through this today is let's build a watch list of compelling long or short setups. And so you mentioned breakdown, failure, shakeout. So just for the folks that may not understand that, it's actually in this particular example, they apply both to the up and down side. But Greg was saying, look, when this cracked, this head and shoulders, it was on our interest list to short a bearish bounce and reversal. But because of the 100% retracement, there's no compelling pattern right now. So it could break down failure means that it may just go sideways here and that be the low. And that's why Greg said, hope the shorts took their profits.
All right. Well, that's what it has to do to be a completed shakeout. And when it works, it's amazing. Meaning this drop and move back up is one piece of the pattern. If this can go sideways for a period of time, which says, hey, buyers keep stepping up in the face of this resistance. And the other concept is that prices move away from that resistance, which opens up the door to a rally. Now, that pattern isn't here yet, so don't even think it. Right now, this could turn right back down, but so more information needed.
Right, correct. That's the conclusion. There's no great setup there.
All right, so now you've got the pound against the euro, so they're in the same mess over there. So really not much going on, but if you were trading that, accordingly, fine. But if we start looking at US against the pound, there's a bit of a crash. And it's more of what's happening there prior to all of this news, because it's been dropping for a while. Going to the daily chart, this is the extent of what started to happen when that news came out. So little crashes going on there, but again, not affecting the U.S. markets just yet.
Right, and then I think just another bit of fundamental news on that was starting with Brexit was killing the pound.
Yeah. Right. So, no matter what it is, we look at charts in exactly the same way. So we always tell subscribers and students, don't get caught up in thinking, oh, Forex is the market to trade or anything else. Things go in and out of favor, and you trade them accordingly. And sometimes what was the greatest market to trade just becomes a market to avoid at some point. I'm looking for a little chat window. Where did it go?
Yeah, Greg. Yeah, Bill is asking, and folks, please type your questions in the room to all attendees and moderators, and that way everybody can see them. But Bill is asking, isn't price action without volume more powerful than price action? Oh yeah, he's just saying, price action with volume. Well, you can summarize it. How do you read volume?
It's a secondary piece of information. You don't need it to trade. With volume, you're looking at the past is what happened. And while that could add some information of value, like volume spikes, but the idea that prices going up or bearish on low volume, that's an old thought about technical analysis, but markets have been going up on low volume for years, and they can go down on low volume. But primarily, as far as volume goes, pay attention to when it spikes.
Right, and we like on what we call an igniting move. So that's a big candlestick that with a price void that looks like, hey, people are interested in this, and the spike on volume shows what we refer to as commitment. There's a lot of churning of shares at that compelling pattern. So that is a good sign, yes. And then on capitulation turns, climactic buy or sell setups, we like increasing volume because it's shaking the last of the Mohicans or the weak hands out. And then we go to the pattern for timing of the entry.
Right. So let's look at a couple of country funds. You know, most of any of these currencies that trade against the US dollar, they're going to be under pressure, but they've popped up lately. Let's take a look at some of those ETFs. Right. So this is part of what going through the scans every week, especially on weekends for our ETF letter, but I'll just sort through what's getting hit the most or the least very easily. And over the last 5 days, Brazil has gone through a little crash. So when we look at anything, we look at multiple time frames to say, okay, something went down a lot. Is there room for it to continue to go down? Because, unless you participated in the move, you're looking to make money for a continuation of the move. So we look at patterns. And the weekly chart, this would have been a great place to have gotten in if you had seen it. Was it retraced back up to where it started to break down from? But look at the monthly chart. And you've coined this as a what?
A bull sandwich.
A bull sandwich.
Well, it's bearish. So yeah, it's a bear sandwich.
Right.
Whatever, but it's an ugly pattern. It's two big red bars with the bullish meat in the sandwich.
Right. So here, what you've had happen was, there's our little thing there. What we've had happen, I'll just get a little drawing tool out here, is that there's a break of a trend. Right? So one of the things, we talked about subjective analysis. One of the things that we do to keep things simple, right? A KISS method is easily just follow the trend. Is it making higher highs or higher lows? Or is that violated? So we can see here where Brazil, and this is related to the time frame that we're looking at, monthly being a long term, every time it makes a new high, right, you check off the low. Check off the low. And when it breaks that low prior to the higher high, it's violated the trend. Simple. So trend lines, unnecessary. This is going to break it every time. Now, this sandwich here tells us that prices tried to rally up and got nailed right back down again. And that suggests it's going lower. Let me say lower to where? Well, is there a void? Yes, there is. And many will say, well, Greg, what about that low? I said, well, maybe it stops there, but what is more powerful? This breakdown and this bar that was bullish bar ignored, or that low? And so this is kind of what I call refilling the tank, right? It tried to bounce after a big move and it can't, and it should continue to move down. So Brazil looks like it's going to continue to move lower.
But on the daily, again, using multiple time frames, it would be, you could have got a better entry. So we'd be looking for a bounce, because otherwise, if you're trading the monthly chart, your stop has to be the high of the monthly's high to start with.
No doubt, which is up here.
Correct.
So this is a whole nother lesson as to multiple time frames, is where I've gotten my bias over here. Now, do I want to put a stop up here? Well, I could initiate a position and put a stop up there and then look to add to it and say, okay, when I get a confirming pattern in this time frame, then I'll add. Sometimes you don't get, a confirming pattern, or a continuation, and it just keeps dropping. So I like to do that a lot of times, where I'll see something in a bigger time frame and I'll put on a smaller position looking to add, because how many of you have been in the, where you said, hey, I'll get into this on the next bounce or on the next setup, and it never happens.
Yep.
So, it's a choice. What is your plan? Would you rather move on to something else? and put on a full position size, or are you okay putting on multiple positions that are starter positions looking to add to them? Either one is fine. All right, let's clean that up. And that's Brazil again. Russia, right? Big drop. This was last week on that news. And as I look at these country funds, of course, you look at, are they going to continue? Are they gotten climactic yet? Are they ready to turn? Nothing here looks like it's ready to turn.
Right.
Well, probably more pain coming there. Australia doesn't look so bad. Well, here's the European fund. I think this has a hedge against the dollar. So this hasn't been hurt quite as bad.
Correct. Currency hedge.
Yeah. Singapore, big drop. Japan, looks like it can go lower. Canada, no real damage there, and so on. This is just part of what we go through, but something more in alignment where those currencies are getting hit. You have United Kingdom, right? There was the big drop on that news last week, and now they're recovering, which should set up the next sell setup. So keeping it really simple, right? What was support should become resistance, and this is where a sell setup should form, and then it drops again. So it's something that we'll keep an eye on. And so on. Italy took a hit, Spain, Germany, they're bouncing back. France, big, huge bounce back. So, this market has been a bit crazy in its moves, being like so violent to the downside and violent to the upside, which does make it a bit challenging when you get those kind of moves. But we'll see how this all plays out. These markets have moved down a lot, and we'll have to see if we go to a higher time frame to see is this just a consolidation in a bullish trend? Well, Brazil doesn't look that way. Right? Look at the difference. So that was clearly a breakdown, whereas some of these others, well, that's a breakdown. Was France that didn't look quite so bad, more of a bullish flag on the monthly. But if you're in it from the daily time frame, where maybe you thought, hey, I'm going to buy this breakout here, you're in some serious pain. So let's shift over to the U.S. markets that seem to be resilient to anything. And let's just go here. And let's just go start with the spiders. Which things don't look so bad, do they? Where this is what I was talking about earlier, this wild movement. Let's go back a little bit. So I said, when things are certain and we've got a market where, things are relatively easy, you get price bars that are relatively equal in size. And then as it accelerated and became climactic, there was this big drop. Now, this is interesting. I like to keep some notes on what goes on in the media. So right at the high, Dan, check this out. Right close to the high on CNBC, they said that the S&P 500 was on its way to 5,000. They didn't say when. They make it sound like, we'll be there next week. Just get ready. Right? So this is interesting. That's why I keep these kind of notes. I've done it many, many years. And the market has this mini crash in February, but comes roaring back down again, and so on. Frank's asking me, where would I sell SPY? I wouldn't sell it, Frank. I'm actually long it, and I see no reason to sell it. I've been saying it's going to make new all-time highs. I told the subscribers in the letter back here. And then this news came out, played a little havoc with it, and it's been going back up. So, based on a sell signal, what we look for is our market internals to give us a sell signal. And ultimately, from a long-term point of view, the yield curve to invert. And you've probably heard a lot about a narrowing yield curve, and that is true, but it's not inverted. It's not, it's getting closer, but it's not there. So not a worry. So part of what we do.
And just to emphasize, Greg, because you say it all the time, and it's an extremely important point, even when it does invert, that's not the exit signal.
No. Markets they'll pull back, they'll chop around, they'll give you something to worry about, but they're just going to draw you back in, right? Because they're going to lure you into everything's okay, like that siren song.
The famous saying, "It's different this time."
It's different this time. So if you know what to look for, you're going to know when it's time to sell. Without a doubt, you will know. So what do you look for? Yield curve inversion. You look for transportation index and stocks to be showing relative weakness, and they'll do that for a while. What happened this week in the transportation index?
New highs.
New highs. That is a bullish sign. And we see markets like the S&P coming back from dips. So, while there's this hysteria, gap down, and here was the bullish turn, and then another sell-off. And Dan, what did I tell the room at the low here?
You said option traders were betting for a crash. This looks like the low.
That's it. And we keep track of the put-call ratio intraday in the chat room. And today, when the market sold off, I said something not so politically correct. I think I said something like the idiots are at it again. They're loading up on puts, and lo and behold, the market bottomed out. So that's a great thing for you to keep an eye on, right? So they loaded up on puts here, and I think it was back on this day, the same thing.
Yeah.
Back up again. And when they start buying too many calls, we take that as a heads up of a warning sign. So right now, what I'm thinking, what we discussed just before we started this was, from an intraday trading point of view, can these markets hold up here this afternoon? So they've come off of the low, and do they go back down, or do they chop around? And if they can chop around here, right? So it's 12:39, lunchtime doldrums. If they can turn back up and we can get a green day here, we may actually get a continuation move up to those new all-time highs. So we're going to see how that plays out. And of course, we're interested in the NASDAQ. And this is another, what I was talking with everybody in the chat room was that these ranges are contracting. And this isn't, I'm not drawing support and resistance lines. What I'm showing here is that the volatility, right, these ranges between swing highs and lows are getting tighter, which means the markets are reaching an inflection point here. Which way are they going to go? Up or down? When we all like to know ahead of time and buy those options and be on the right side of it. But we make an assumption because the trend is up in multiple time frames that it'll be to the upside. That doesn't guarantee it, but that's what we're looking for. And the price action, at this time does support that.
And provided the market internals aren't signaling a contrary opinion to that belief.
Absolutely. So, and we could take a look at that, but getting into deeper conversations, but we can take a look at it. Just looking at some of these other markets, the Dow, which was lagging, it's well below its all-time high, but look at what it's done here recently. Cleared resistance, and this is the craziness of this market and the news, in that it cleared resistance, it broke down under major support, and then rallied back up above what we call major resistance. And this kind of price action is insane, but it really communicates tremendous uncertainty and a nervous market. But from a longer term point of view, buyers keep stepping up, which is bullish. So,
right. Look at all three of your moving averages, the 20, 50, 200, all pointing up, higher highs, higher lows. So on that time frame, yeah, it's bullish. That's objective. Right. Doesn't mean to buy it right now, but it's bullish on multiple time frames.
That's right. And if you learn how to use these moving averages, as we do and teach, those three moving averages tell you that the weekly, the daily, and the monthly are all in uptrends here, just by looking at this one chart. And there's very little to no resistance here until you get up to the highs. So follow the trend now, as I said earlier, in that, look, here's your swing low. And does it pull back? Let's just remove all of this, since we're doing a little lesson here. Right? What was resistance becomes support. If it pulls back here, this is where buyers should be, give or take a little bit. Doesn't have to be exact. And if it does pull back, the expectation is it continues to go up unless it breaks through here. And the craziness was, well, we're doing the same thing here. Minor support, major support, and so on. And it broke through that. It came down to the next level and rallied all the way back. That is unusual, but that's what this market has been doing of late. Oh, and what else do we want to look at, Dan?
I'd say some sectors. Let's see if we can, have a focus list of, and maybe even show them our XPH that we're still in the ETF Trader. The ETF Trader is meant for longer term holds, weeks to months. So we trade off the larger time frames, and we've been in this one for a long time. We're in XLG. That's the S&P 50.
All right. So why are we in this? Let's give them a little value added, Dan. Because it wasn't looking so great here, but we're telling subscribers this is bottoming. Look at the downside shakeout. Look at the price action here. Look at this reversal. This is about, I think, where we got in it, right, Dan? Right around here?
Correct.
And then look at this on the monthly time frame. It's breaking out of a base into new all-time highs. It looks fantastic. So no reason to sell it.
Right.
And the gap down was bought today. And the 200 is just starting to turn up. Looks great. What was the other one, Dan?
XLG.
Right.
That's the S&P 50.
Well, the Russell top 50. So a little diversification there, and this is making new all-time highs. It looks great.
And XLI.
Industrials, this was this weekend.
Correct.
And so, monthly's in an uptrend. We always look at multiple time frames. And what caught my eye on this one was this big bottoming tail bar. And so it had come up to resistance and pulled back, and buyers stepped up big time when it pulled back there. So we had a big range expansion bottoming tail bar. That's a powerful signal. Now it's backed off a little, intra-week, but big deal. This isn't a day trade. This is, a bottoming pattern here with a higher low. You can call it a cup and handle, call it whatever you want. It's bullish. We're looking for it to go higher.
Yeah, if you want to look at a couple other ETFs, I'd see that the semis have been underperforming the Qs in broader markets.
Yeah, and tech has been in a little trouble as of late, but it's just a wide whippy consolidation from a weekly time frame. But the daily, pulled back to that big support area, and it's coming back. And Nvidia's earnings are out. That got pretty erratic. AMD is the star here, which I recently bought. Couldn't help. I said, hey, it's going up. Does it look like it's going to stop going up? And it looks great. It looks great. And now we can start looking through stocks within the sector, but not everything looks great. But AMD is one that it's been outperforming. Year-to-date change. Look at it; it's up 100%. So just to come back to our method, and what I'm saying is the indicator-based methodology doesn't make sense. I would say, is this overbought yet? If you're looking at indicators, and you might say, yeah, it's overbought. Well, it's not going down, right? Change your indicator, change your parameters, or give up your indicators. Stop using them because they mislead. Felicia's asking, is it a good buy now? If you're willing to put your stop down here, yes. I actually bought it yesterday when it broke above the high here. And I have my stop down here. If it pulls back, it gives me a consolidation, I'm going to buy more. Because it's an outperformer. It's showing relative strength. It looks great. Right. Dan, don't we have a spread on this?
Yeah, we have a bull put credit spread, absolutely, and we did it on the reversal day, and the reason for that was that it gapped down with AMAT and NVIDIA in the sector, and in the first 30 to 60 minutes, it came roaring back. So then on an intraday entry, we said, it's not ready to go long, but this is a beautiful reversal, and we sold the out-of-the-money put spread. Correct.
All right. Those of you that aren't familiar with that, it's just a matter of taking two put options that are below this support. One is more expensive than the other. You sell the expensive one and you take some of the money to buy the less expensive one, and you keep the difference. As long as it doesn't go down, you get to keep the money.
Hey, Greg, put up MU just for comparison of that versus AMD. Because I received an email last week from somebody as this was breaking down MU. He's asking me, he says, hey, Dan, I saw one of your YouTube videos. And he says, what's going on with this stock? Because it has good fundamentals. And there goes our difference, what we talked about earlier. What moves stocks? Supply and demand imbalances do. The fundamentals obviously have an effect long term, but this is reality. I said, why are you holding on? Because he was like down $4 when he emailed me. I said, why are you holding a stock in a downtrend that's breaking support? And I showed him AMD. I said, look, we're in this trade. I don't know what the fundamentals of AMD are, but they're surely outperforming, or else the chart wouldn't look like that. End of story.
Right. And this has been doing extremely well for a long time. And here's another example of what I explained earlier of price ranges being relatively equal. So you can see here, there was much more certainty about it. And then things got a little uncertain. And then it came back again after that correction. And then again, whippiness, followed by the blow-off move to the upside. Now look at the trend here. More of a controlled trend. sideways, building support, move up, pull back, move up, got wild again, and then a climactic vertical type of move. And all of what's going on now is trying to digest all of that. So if you think that this is a good long-term buy, you wait for this to begin to, do this kind of price action where it breaks and comes right back again and doesn't go down. You could certainly look at higher time frames. So you can see here, this is probably where the fundamentals began to change. And it was accumulated and it rallied. And now where it's gotten all wild and whippy, it's gotten ahead of the fundamentals. And that's what the technicals here are communicating. Even if we go to the monthly time frame, you could say, well, hey, there's room for this to go higher based on the technicals, but you have to wait or should wait for this erratic movement to start to repair itself or clean up, as I like to say.
And I heard everything you said, and my response is, why bother? I mean, if remember our first slide, the only way you're going to make money trading and investing is acquiring inventory and closing it out at a better cost basis, and you keep the difference.
Well,
why even have this on your radar as opposed to AMD?
I'll tell you why I think. Because this was such a phenomenal mover, here. And those that missed the move many times become enamored by it. And they of the belief that it's going to double again and that they should focus on this. And a lot of times they don't know how to read the chart to say, hey, no, this isn't the time. Now, when I see stuff like this, I think, I don't think this is going to do something of significance here. But when I do see something, but it's not ready now, I just set an alert.
Right.
So just say, I'll put this line up here, and just an example. I say, well, you know what? If MU can get up to that line, I might be interested in it. All I do is I click the line, I set an alert. I say, you know what? If it can get up there within the next month, consider buy. Now, I'm not saying I'm going to do that if it gets up to that line, but this is the process of preparation. We can go through a lot of charts, and Dan and I can explain to you the patterns. We can explain to you how to exploit the patterns. But as a stock trader with swing trades and credit spread trades, and a lot of it is preparation and, setting up scans, minders, alerts. That's the preparation to get ready. So MU isn't on my radar right now, but if it gets up there, I'll take a look. Until then, forget it.
Well, and I would say maybe even put a second alert down at 40 or whatever number that is.
And it's so simple to do. Alert set. Forgotten. We move on.
Right.
Now, here is another sector that puts the NASDAQ market in question, whether the Qs can continue to move higher. So here is where all the leaders are, what have been leaders in the markets, are housed. Twitter has gotten a beating. I own this, just a disclosure. Had a great day yesterday. Facebook, that's owned by institutions, probably all of them. And that gap down is serious. And now the question is, can it hold this retest? So the big gap created this void above, but it came up into this resistance and turned lower. So now can it rebuild and form a W bottom here? Today it's starting to. You can see how the momentum has stalled. Can it form a big green bar? And my ideal pattern is one in which it dips down here, breaks, and forms, a bottoming tail type of bar for definitely for a put credit spread, and maybe even a swing long.
I was going to say it's on our watch list for put spread. And Greg, also point to the engulfing bar on the prior low, because on that engulfing bar into the close, we sold a put spread on that, a 3 or 4 day put spread that worked out beautifully.
Right, exactly. Right. So spreads, the way we approach them, or just does the chart say prices won't go up or down to a certain level? It's super simple once you know how to put all the pieces together.
Well, and if you want to show them Tesla, then since we talked about it, trading fear and patterns and credit spreads, because we're out of it today. We booked like 75% of max profit in 2 days.
All right. And
so we entered that on Monday.
Right. And I'll tell you, Dan got some death threats over this. I'm joking. No, but really, and rightly so. People saying, why are you messing with something that is so in the news, such controversial information?
Right.
And look, it went up, it came all the way back down to this low, and it had an exhaustion gap. And that's where Dan said, hey, let's sell a put spread on this. What were the strikes, Dan?
275, 265. So they were like $28 out of the money.
Right.
Meaning, and then we sold them for $1.03 a share. So if you did a 10 lot, which, it's a big lot for Tesla, but that would still be over $1,000 credit received. And as long as it stays above 275 by this Friday, it would be full profit. But once we enter a trade, we just manage it in between. And when we sell credit spreads, we always have the gap risk. So our goal typically is if we can get a quick 80% of max gain, we just take it, move on to the next trade.
Right. So that's the idea behind that, is like, as long as it doesn't go down here by Friday, you get to keep the money. Your max loss, George, is considerable if you manage it just by saying, hey, if it goes down there, I'm just going to let it do whatever. So if it's the strikes are 10 wide, it's huge.
Right. So let me add to that. George, the textbook answer is the spread width, $10 less $1.03 a share. So that's $8.97 a share max loss if it expires below 265. But a couple things. Number one, it depends. Our stop is that bar is low. So it depends if we got stopped out an hour after entry, or if we got stopped out an hour into expiration where we still had $10 of further cushion, we would stop out at probably a nickel and still make 98 cents a share. So that's one thing. It depends when you get stopped out. Number two, we never take our max loss because we use the charts to exit the trade. And we've just recently sent our subscribers some nice credit spread money and trade management to help them calculate the share size and the worst contract size, rather, not share size, contract size in the worst case scenario if it did take out the stop immediately. We proper share size. But also when I give you that textbook answer of $8.97 a share, you can't say, oh, well, that's crazy to risk that much to make $1.03. You have to focus on probabilities of what is real. When you buy a stock, you don't buy Tesla at $300 a share and saying, oh my God, I'm risking $300 to make whatever your target is on a swing trade. So you look at your stop loss per the charts. So I hope that helps.
Everybody has to realize, and you know what, it's so overlooked, but it's common. It seems to be common sense, but it's the most overlooked part of what people get educated about, and it's money management. You know, it's so important whether you're trading the stocks, you're trading futures, an ETF, or a credit spread. If you don't have a money management part of your plan, you've got a problem sooner or later. So yes, credit spreads, the reward to risk is not good. But if you know how to manage them, they're profitable trades and income trades that work out quite nicely. And those of you that are subscribers, whether you subscribe to any one of our services, when you log into your member area, scroll to the bottom and you're going to see an extensive document on money management with videos, you know, with the text. Dan put a lot of time into creating that even talks about how to set up contingent orders for spreads. So please, you know, log into your member area and take the time to read it and watch the videos. Yeah. All right, and maybe a few more before we cut off here, Dan.
All right.
You know, everybody's interested in Amazon, which just looks great. Higher highs, higher lows. There was the whip around there.
And that looks like a credit spread candidate. I'll watch.
Pat, I think I have to use that one in the next webinar. Pat says money management isn't sexy until after you lose your ass. That's funny. You know, PayPal, you know, consolidating there. There's a lot of stocks within here that are consolidating. Netflix going through a bigger correction. What do you do with this? Go to a higher time frame and see if there's a turnaround story going on, and then look for, in this case, is this the beginnings of a downside shakeout? Will it go sideways here for a while, which will result in the next move up? Or what is it going to do? Right now, stay away. Right? But since the higher time frame is bullish, why not take a look? Right? You know, monthly's a little extended, so I'm not so sure about Netflix right here. Maybe it does need more of a correction.
Right.
You know, GoDaddy's had a big move, and we go through every one of these charts in the same way every day and explain them, and you know, explain to our subscribers. And I can't remember the trial, Dan. Is it just mastertrader.com/green for the chat room trial?
A green trial.
That's the, let me, I think I have it. Maybe I did that. Yeah.
That grub that you just looked at, I'll watch for put spread. I like the daily there.
Mm-hmm. Yeah, green. Yeah, this is the actual. We had a short one, but a shorter link. But that one works if you're interested in the 3-day trial. That sets up now. Today is what, Wednesday?
Yep.
Yeah, you probably want to utilize it on Monday and come in Monday, Tuesday, Wednesday so it's for 3 days. You come in, well, you know, you set it up today, you can come in today, tomorrow, and Friday, your choice. It's a 3-day free trial. You can take it anytime. And, come in, ask us questions, see what we're doing, see the trades we have on, and we'll definitely learn. Yeah, so with that being said, Dan, I think we're ready to go have some lunch.
Sounds great. So yeah, hope everyone enjoyed that. As always, we give you, you know, very, very excellent, unfiltered, non-proprietary information on how to make money investing and trading in the market. So come check us out with one of these services if you haven't already.
All right, guys. Have a great one.
Have a great day, folks.
Bye-bye.